A lovely afternoon to everyone. This is Miss Kurt welcoming you once again for today's webinar. Two of the most awaited decisions have been released last week pertaining to the income and activities of a qualifying free zone person. With the release of these two decisions, the picture of corporate tax for free zone entities have become much clearer. For this week's session of our series of webinar, we will be sharing our insight on the treatment of free zone entities under the corporate tax regime. So as usual, we will be starting by discussing the topic on the first half of the session. You may send your questions on the message box below. So as the pointers for today's webinar, first we'll be defining qualifying free zone person, on what conditions you could consider a free zone entity as a qualifying free zone person and its limitations as well. We would also define the key terms, which is the domestic permanent establishment, excluded activities, as well as the qualifying activities. And on the third one, we'll be discussing about the income of a free zone entities, on which income would come under the qualifying income and which income would come as a taxable income of a qualifying free zone person. And lastly, the de minimis requirements, conditions, and non-qualifying revenues under it. So what is qualifying free zone person? A free zone entity is that meets all the relevant conditions specified on the law, and the respective decisions will automatically benefit on the free zone corporate tax regime, or termed as a qualifying free zone person, and be subject at the preferential rate of 0% on their qualifying income. So the conditions for a free zone entity to be considered as a qualifying free zone person, we have six conditions as stated on the presentation. So the first four conditions was initially released or was stated on the corporate tax law, and the additional two conditions was added after the release of the recent on the free zone person. So the first condition is maintaining adequate substance in the state. So for maintaining adequate substance in the state, the free zone entity must undertake its core income generating activity within free zone. Also, it must meet like adequacy test, like having in regard the level of activity being carried out by the entity. The entity must have adequate assets, an adequate number of employees or qualified employees, and incur an adequate amount of operating expenditure correlating to the activity or the revenue that is being carried out by the free zone entity. On this note, activities can be outsourced as well to a related party in the free zone or a third party in the free zone, provided that the qualifying free zone person has adequate supervision or control of the outsourced activity. So the next condition is the free zone entity must derive qualifying income. So on qualifying income, we would be discussing this on the upcoming slide that we will be having. The third one is the entity has not elected to be subject to corporate tax at the standard rate. So a free zone entity also have the option to elect itself to be subject to the standard rate or corporate tax for some number of reasons. Like for example, if they wanted to join a group under corporate tax, then they would have to be subject to the standard rate on corporate tax. The fourth one is the free zone entity must comply with the transfer pricing requirements and the necessary documentation. So again, this refers to the arm's length principle with regards to transfer pricing when you are dealing or having a transaction with a related party or connected persons as well. And the two last conditions that was added was on the fifth one, the free zone entity must meet the de minimis requirement. So the de minimis requirement, we would also be discussing this on the upcoming slide that we would be having. The sixth condition is going to be the preparation and maintenance of audited financial statement. So as initially released as well on a cabinet decision or ministerial decision, qualifying free zone person must prepare and maintain an audited financial statement that would help the authority ascertain the taxable income that would be declared upon doing the return submission for the end. So if a qualifying free zone person at any time during a tax period fails to meet the mentioned conditions, it shall cease to be a qualifying free zone from the beginning of the relevant tax period and subsequent 4 years. So for like a minimum of 5 years, it would be ceased to be deemed as a qualifying free zone person. Although qualifying free zone person would be subject to a preferential tax rate of 0% on their qualifying income, being qualifying free-zone person has also its own limitations. So below are or what is stated on the presentation are the reliefs and limitations for a qualifying free-zone person. First, a transfer within the qualifying group would not be allowed for a qualifying free-zone person. So usually companies that are part of a qualifying group can transfer assets and liabilities between themselves at their net book value. So this means that the transfer can be carried out tax neutrally where no gains or loss needs to be taken into account in determining the taxable income in relation to the transfer. So this specific condition would not apply to qualifying free zone person. So the next one is a transfer of tax losses would not be also possible for a qualifying free zone person. On the corporate tax law, a tax loss or a portion thereof may be offset against the taxable income of another taxable person. However, as I have mentioned, this specific condition would not be applied for a qualifying free zone person. Small business relief will also not be available for a qualifying free zone person. So on the previous webinar that we have had as well, small business relief can be availed by small businesses who does not exceed the revenue threshold of 3 million dirhams. So small business relief they would be treated as if they would not derive any taxable income for that relevant tax period. And lastly, forming of tax group is not possible with a qualifying free zone person, as one of the conditions on forming a tax group under corporate tax is neither the parent company or subsidiary is an exempt person or a qualifying free zone person. So these four are what we can say as the limitations of being a qualifying free zone person. Now we would be moving on to the key terms that we have to be familiarized with so that we can discuss a qualifying income more easily. So the first term that we is going to be domestic permanent establishment. So basically, the domestic permanent establishment refers to a place of business or other form of presence of a qualifying free zone person outside the free zone in the state. So on determining whether the free zone entity have a domestic permanent establishment, so it is going to be patterned on determining whether a non-resident person has a permanent establishment as well. So the same three conditions would be applied. So the first one is if the free zone person have any fixed or permanent place in the outside free zone through which the business is conducted. The second one is if they have a person who has or habitually exercises an authority on behalf of the qualifying free zone person or any other form of nexus outside the free zone. So the domestic permanent establishment of a qualifying free zone person shall be treated separately as if the establishment is a separate or independent person that is a related party of the qualifying free zone person. So determining whether the free zone entity have a domestic permanent establishment is specifically important as the income attributable to domestic permanent establishment of a qualifying free zone person would be a taxable income or would be subject to corporate tax on standard rate. So the next term that we would be defining is a qualifying activity. So the qualifying activities was specifically stated on Ministerial Decision number 139 of 2023. So we have here at least 9 activities that they have the decision has specified. So the qualifying activity is important in respect of dealing with a non-free zone person or having a transaction with a non-free zone person. So the first activity is the manufacturing and processing of goods or materials, followed by holding of shares and other securities. Ownership, management, and operation of ships would also come under the qualifying activities. So to continue, regulated reinsurance and fund or wealth management would also come under the qualifying activities. So these are the reinsurance and fund wealth management activities that are subject to the regulatory oversight of the competent authority in the state. Headquarter and financing services to related parties, as well as financing and leasing of aircraft, logistics services, and on the eighth point, distribution of goods or materials in or from a designated zones to a customer that resells such goods or materials or parts thereof or processes or alters such goods or materials for the purpose of sale or resale. On this one, it must be noted that the activity of distributing goods or materials must be undertaken in or from a designated zone, and the goods or materials entering the state must be imported through the designated zone. So as what some of you might be aware already, designated zone are the zones which have strict control or criteria and have a security procedures in place to control the movement of goods. So on the last point, they have mentioned any activities that are ancillary to the above. So activities that are ancillary to the above mentioned activities must not have any independent function, but these are the activities that is only necessary to perform the main qualifying activity. The next term that we would be defining is the excluded. So again, this one is stated on the explained on the ministerial decision number 139 of 2023, same as the qualifying activity. So on this excluded activity, it is mostly important in dealing with a free zone person or having a transaction with a free zone person. So they have listed at least four or more than four activities under the excluded activity. The first one is transactions with the natural persons, but is subject to certain exemptions. So these are those under qualifying activities related to shipping and aircraft, plus fund, wealth, and investment management. Also, regulated banking, insurance, and finance and leasing activities subject to certain exemption are also under excluded activities. Ownership or exploitation of intellectual property asset and the ownership or exploitation of immovable property other than the commercial property located in a free zone where the transaction in respect of such commercial property is conducted with the other free zone persons. So on the second point as well, I would just like to mention for regulated finance and leasing activity, this would be with the exception of activity that would fall on treasury and financing services to related parties and financing and leasing of aircraft, including engines and rotable components. In the next part, we will be discussing about the incomes of a qualifying free zone person. So again, for a qualifying free zone person, it is possible for them to both earn a qualifying income that would be subject to 0% as well as taxable income that would be subject at a standard rate of corporate tax, which is 9%. So based on Cabinet Decision number 55 on 2023, they have specified three categories of transactions by which the free zone person can earn a qualifying income at 0%. So the first category are the incomes derived from transactions with other free zone persons, except for income derived from excluded activity. So this is the one that I have mentioned a while back. For transactions with the free zone persons, it is very important to know whether that specific transaction that you have undergone is listed on excluded activity. So the income can be considered as derived from a free zone person if the beneficial recipient is a free zone person. So to know whether the beneficial recipient is a free zone person, the end user must be the person who has the right to use and enjoy the service or the good and does not have any contractual or legal obligation to pass on such service or good to another person. And the term good that I have mentioned shall mean tangible or intangible property that has economic value in dealing, including the movable and immovable property. So for the next category, these are the income derived from transactions with a non-free zone person, but only in respect of a qualifying activity that are not excluded activity. So it is also possible for a qualifying free zone person to earn a qualifying income while dealing with a non-free zone person, just that that specific transaction should be only in respect of qualifying activity. And the last category is any other income provided that the qualifying free zone person satisfies the Demonymus Requirement as prescribed by the Minister and Cabinet decisions. So the Demonymus Requirements would be discussing it on the last slide or the next slide that we would have for this session. Then the taxable income that would be subject to a 9% corporate tax rate would be the income attributable to a domestic permanent establishment or a foreign permanent establishment, as well as income attributable to immovable property located in a free zone. So for income attributable to a domestic foreign permanent establishment or foreign permanent establishment, such income would be considered as a taxable income of any such establishment for that period calculated as if the establishment was a separate and independent person that is a related party of the qualifying free zone person. And then for income attributable to immovable property in free zone, this is specifically like, for example, with a transaction with a non-free zone person on a commercial property. So for example, commercial property are like immovable property or part thereof that is used exclusively for a business or business activity and is not used as a place of residence or accommodations like including hotels, motels, bed and breakfast establishment, service apartments, and the like. So for this specific category as well, any other person in respect of non-commercial property would be considered as a taxable income, which would be subject at the 9% tax rate. Now we will be discussing about the de minimis requirement. So the de minimis requirement are considered to be met if the qualifying free zone person's non-qualifying revenue does not exceed the prescribed percentage of the total revenue in that tax period or the prescribed amount, which whichever is lower. So as for the cabinet decision that was released, the percentage must not increase to 5% or a prescribed amount of AED 5 million, like whichever is lower on that one would be applicable on the situation. So the non-qualifying revenue that they could consider are the excluded activities and the activities that are not qualifying activities where the other party to the transaction is a non-freezone person. So on calculating whether the revenue or the non-qualifying revenue does not exceed the prescribed percentage or amount, there are certain transactions which should not be included on the calculation. So these are the revenue attributable to immovable property located in free zone and the revenue attributable to domestic permanent establishment or foreign permanent establishment, as these two criteria would automatically come under as the taxable income of a qualifying free zone person. So if you can remember the third category of a qualifying income, wherein we have mentioned that any other income, if the qualifying free zone person would be meeting the de minimis requirement, then this non-qualifying revenue, like the one listed on excluded activity, as well as the activities that are not qualifying activities where the other party to the transaction is a non-free zone person, would come under as a qualifying income as well. So that's it for today's session. We have already discussed all the relevant topic for a qualifying free zone person. Now we will be taking in the questions, so you can have it message on the message box and we will have it addressed like in within 5 minutes.